Alright, hey guys, Scott here again with a brand new video, and for this one, I'll be diving into my personal watch list here in ThinkOrSwim, and I'll be discussing all the various important metrics and indicators that, in my view, I think all option traders should have on their watch list as well. Right, so as a result, whenever you come into your platform here to look for new trades, you can pull up your watch list and easily scan through that and see the most important information about each stock you like to follow to ultimately figure out which of those stocks are in good situations or have good setups for new trades on that day. Now, briefly here before we dive in, if you want to learn how you can automate your specific option trading strategy and perform detailed trading research with things like backtesting software and simulations, then make sure you watch until the end of the video. And then also, if you want to join a very exclusive online community where you can learn how to trade options and my overall custom approach to the markets, then you can now join my options trading Discord as well. So definitely check out the description of the video below to learn a lot more about that. And then lastly here, for anybody who is also brand new to the channel, again, my name is Scott, and you can also find me on SKILLSHARE as well, where you can take my very detailed classes on options trading or stock market investing. And you will also find some links to a few of my introductory courses in the video description as well. So be sure to check them out, and when you join SKILLSHARE using those links, you'll get a full 1-month free trial. Alright guys, so now we'll dive in here, and also I do want to say that if you don't use ThinkOrSwim like I do here, then don't worry, because the vast majority of the metrics and indicators you're going to see on my watch list should be offered by most other trading platforms as well. And if that's not the case, if there's a few metrics that your platform does not offer, then I'll discuss how you can possibly get around that as well. And so with that being said, we'll now come over to the Market Watch tab in ThinkOrSwim, which is where my watch list is located. And so as you can see here, my watch list is pretty extensive. I would guess there's about between 100 and 200 stocks that I watch pretty closely here. But in particular, as you can see at the top, in all these different columns, these are the various metrics and indicators that are most important to me. And some of them, as you'll see, are pretty self-explanatory and obvious, but others might be a bit more nuanced and perhaps unknown to many of you. So beginning first on the left-hand side here, and we'll gradually work our way to the right. The most obvious columns, of course, are the ones here where I have the ticker symbol and a basic description about each stock that's in my list. So of course, not much more to say on that topic, and we'll move on here. And so the next two columns are the bid and ask prices of all these various stocks. Now, these two are very important for two different reasons. Number one, of course, this is how you can determine the fair price for each one of these stocks, right? For example, Carvana here, the bid price is $33.87. The asking price is $33.93. So the fair price is pretty much right in between. So I'll call it $33.90 or so. But then also beyond just assessing the actual price of these stocks, the bid-ask spread also gives you some insight into how liquid the stock might be, and therefore how easily your orders might get filled if you ever do trade the stock. Right? So for example, in the case of Roblox here, as you can see here, the bid price and the asking price are very, very close to each other. So again, therefore, if I ever had a need to trade the actual stock, either through possibly getting assigned on some contracts or having to use the stock to defend existing positions, etc., then it's definitely very important to find stocks and trade stocks with very tight bid-ask spreads, right? Because otherwise, if the spread is very, very wide, then chances are your orders are not going to get filled at good prices, right? So for example, if you buy the stock, you might be paying too much for those shares, and when you sell the stock, you might be receiving too little for those shares. So again, bottom line, having the bid-ask spread here on your watch list is very important to judge the actual fair price for the stock and then also the liquidity of that stock as well. Now next up in these two columns, both of these give you some insight into how the price of the stock has changed since the previous trading day. So first up here, we have the actual price change of the stock compared to yesterday. So in the case of Coinbase here, this stock today is up by about $1.50 compared to the last trading day. And so I do like to have this column here in my list because, again, it gives me some basic insight into how the stock is moving today. And then also I can sort this entire list by any one of these columns here. So right now the list is sorted by the absolute price changes of all these stocks from the most negative to the most positive. So for example, in the case where I wanted to trade stocks that are down on the day or perhaps up on the day, it's very easy to sort this list and find those stocks very quickly. But the main issue with just using the net change column is the fact that, of course, all these different stocks have very different prices, right? So for example, Snowflake being down by almost 13 bucks today, that's definitely a decent move to the downside for almost a $200 stock, but this would be a very, very big down move, borderline catastrophic for a stock like Kohl's, for example, which you can see right here. This stock is only about 30 bucks per share. So of course, if this one did decline by 12 or 13 bucks in one day, that means it would be down by almost 50%. So bottom line, that's why next to this column, I have the actual percentage price change as well, right? So basically this column just puts this column in terms of a percentage. And now based on this column, I can compare all the stocks based on their specific moves for the day. So for example, if I sort this entire list based on this column now, I can see that Snowflake is still the stock that is experiencing the biggest down move on my entire list, right? Because being down by 12 bucks means Snowflake is down by over 6% and no other stock on my list is down by anywhere near 6%. So bottom line, if I was looking for trades to play for some kind of price reversion, basically, so for example, if a stock is down by a huge amount, I might want to get bullish on that stock to play for a short-term bounce. And then conversely, if a stock is just skyrocketing, perhaps I want to make a bearish trade to play for that stock coming back down to earth. So ultimately, having the percentage change column in your list and being able to sort your list on that column makes it very easy to find those stocks that are experiencing a massive move in one direction or the other. Now, next up here, we have the actual trading volume for each one of these stocks as well. And similar to the bid-ask spread, the volume gives you some very clear insight into how liquid or actively traded these stocks are as well, right? So typically, the bigger the trading volume, chances are the tighter the bid-ask spreads will be, and also the more easy it will be to get your orders filled if you're ever trading the stock. But then also beyond that, very, very heavily traded stocks often have very heavily traded options as well. So in the case of Nvidia here, so far 25, almost 26 million shares have been traded today. And then as you can see here with the bid-ask spread, the difference is only a few pennies wide. That's great. And then also, if we go to the trade tab real quick, and we'll go to the Nvidia option chain. And so for example, we'll take a look at the September monthly contracts and scroll down a bit here. And here we go. So as you can see for both the calls and the puts, the volume for the actual contracts are also very, very high in the thousands. And of course, just like with the actual stock itself, high volume usually means very tight bid-ask spreads. So bottom line, both the stock and the options here for Nvidia are very liquid, and therefore you will get filled on your orders at very, very good prices. And so again, that's why I think having volume on your watch list is a very important metric to have. And then next up in these three columns, we have the opening price, the high price, and the low price for the current trading day. So in the case of Kohl's here, the opening print for the stock once the market opened was 29 bucks and 23 cents. And so far today, this stock has gone as high as 29.36 and as low as 28.51. And so these metrics give you a very clear idea of the daily price range for a particular stock. So for example, if you see the high and the low are very close to each other, then obviously that means the stock is not really doing anything and perhaps not worth trading. But if the difference between the high and the low is very significant, then obviously something is happening with that particular stock. Right? So if the stock is being very volatile today and making some pretty extreme highs and lows, then at minimum, that's a stock worth taking a look at and to see if you can figure out any possible trades you want to make on that particular stock. Right? Because ultimately, if you're not using directionally neutral option trades like strangles or iron condors, you pretty much need some directional movement with that stock. So again, if the high and low are basically the exact same or very close to each other, that means the stock is not moving at all and perhaps not worth trading, at least directionally speaking. But if you do want to make a directionally neutral kind of trade, then you might want to look for stocks that are not really moving a whole lot today and therefore have very narrow price ranges. And then next up here, we have the implied volatility for the stock. And this one is very, very important in my opinion, right? Because next to the actual stock price, the implied volatility of the stock has the next biggest impact on the price of options. And generally speaking, if you want to use option selling strategies, then you want to find stocks with high implied volatility. So therefore, I can sort my entire list based on the implied volatility of all these stocks. And now I have all these stocks sorted in descending order based on their implied volatility. So for example, with Carvana here, the implied volatility for this stock is 143% or 1.43 as a decimal. So this here is very, very high implied volatility for any individual stock. So what that means, of course, is Carvana is going to have very, very expensive option contracts. And so bottom line, that's why it's a very good idea to sell options on high implied volatility stocks, because you can collect the most premium. Whereas compared to stocks down here with very low implied volatility, in the case of this gold ETF, GLD, the implied volatility is only 16%. And so as a result, if you wanted to trade gold for some reason, you might want to use an option buying strategy on this ETF, right? Because these options are going to be very, very cheap. But also here, the one very important thing that the raw implied volatility will not tell you is if the current value of the implied volatility is high or low for that particular stock, right? Because based on what's happening in the market right now and based on what's happening with that particular company, the implied volatility for the company's stock will fluctuate quite significantly across time. And so therefore, as the implied volatility fluctuates, that's also going to cause the option prices to fluctuate quite wildly as well. And so that means for option sellers, it's even better or more advantageous to find stocks with generally high implied volatility anyways, but also if the implied volatility right now for that stock is much higher than usual. And then conversely, for option buyers, it's better to find stocks where the implied volatility is much lower than usual for that stock. And so ultimately, that's why, in my view, you need some kind of indicator or metric to basically assess where the current implied volatility is right now based on where it was historically. And that's where the IV percentile metric becomes very, very useful. Now, unfortunately, here in ThinkOrSwim, this is actually misnamed. This should be called IV rank, right? So in the case of Carvana, once again, the IV percentile is technically 64, almost 65%. But if we go to the charts real quick and we go to CVNA, you can see down here with the actual implied volatility chart, the IV rank is actually 65% and the IV percentile is 77%. Very different. So again, just keep this in mind if you're using ThinkOrSwim. Whenever you see IV percentile as part of the watch list or as part of the scanner, the stock scanner, it's actually IV rank. It's just that for some reason, they never bothered to fix this. But bottom line here, both the IV rank and IV percentile will tell you or quantify how high or low the current implied volatility is right now for that particular stock. So in the case of Carvana, if we come back to the charts so you can at least visualize this, again, down below is an actual chart of the implied volatility for the stock. And right now, as you can see, it's definitely on the higher end, right? With the IV at around 143%. It's definitely not at the highest point it's been in the past 1 year, but it's also still much, much higher than usual. And so IV rank specifically is a number between 0 and 100. And the closer this metric is to 100, the more and more unusually high the implied volatility is right now for the stock. And then conversely, as the IV rank approaches 0, that means the implied volatility in general is becoming much lower than usual. Now this indicator right here might be the one major indicator that is not offered on most other platforms. So if your platform does not offer IV rank or IV percentile, chances are it does offer some way of quantifying if the current implied volatility is higher than usual or lower than usual, right? So in fact, all the platforms I've used in the past do all have just a general implied volatility measurement. But again, if they have a different metric that assesses how high or low the IV is, then that will definitely work. But besides IV rank or IV percentile, I would imagine most other platforms, if not all of the platforms, do offer these other various metrics here as well. These are all very, very standard. But again, just like implied volatility, I can sort my entire list based on the IV rank. And then now I can very easily see all the stocks in descending order, which perhaps have the best setups for option selling strategies, or if I sort them based on ascending order, and therefore all the IV ranks are now very, very small, then these stocks would be the best possible candidates for option buying strategies. Now, next up, I have the HTB/ETB column, or hard to borrow/easy to borrow. Now this one here is probably the least useful for most option traders because unless you ever have a need to short shares of stock, then this column is not going to be necessary. Right, so basically for my particular approach to options trading, I do either buy or short shares of the actual stock to defend trades that are starting to lose money. So again, for me at least, having this column is very easy to see which stocks are either easy to borrow or hard to borrow. Right, because bottom line, if you want to short shares of stock, you technically have to borrow those shares from your broker and then sell them in the market. So naturally, of course, if those shares are hard to borrow, you may not get filled on your short selling order. But again here, if you don't ever have a need to short the underlying stock, then you will not need to include this column here in your watch list. And then finally here we have correlation and beta. So both of these metrics give you some insight into the relationship between each one of these stocks and the broader stock market. In which case here with these calculations, I have them configured to again assess the relationship between these stocks and the S&P 500. Now correlation in particular is a number always between -1 and +1, where the closer it gets to +1, in the case here for looks like Citigroup, which has a correlation of 0.95, this generally means that these kinds of stocks will move in a very similar manner to the S&P 500. And then conversely, if the correlation is strongly negative or close to -1, in this case here with JD.com, the correlation is -0.54. That means this stock moves in a very opposite fashion to the S&P 500. And then lastly, for a stock with a correlation near 0, in the case here with Alcoa, that means there's basically no relationship whatsoever between this stock and the S&Ps. Right, so basically this stock is doing its own totally separate thing, and it's not really tied to the broader market right now. And then the beta here is also a calculation which is based on the correlation, and this will tell you the expected magnitude of the price change of each one of these stocks here when the S&P 500 moves by 1%. So for example, if I sort the list based on our beta here, we can see that Upstart has a beta value of 4.74 and also a correlation of 0.84. So again, in regards to the correlation, this means that Upstart and the S&Ps will move in a very similar fashion to each other. If the S&Ps go up on a specific day, chances are Upstart will also be up as well. And then same thing, of course, if the S&Ps go down on the day, Upstart will likely follow in suit. But then again, the beta will tell you by roughly how much Upstart will move when the S&Ps move. In this case here, if the S&Ps go up or down by 1%, then it's expected that Upstart will go up or down by about 4.73%, or almost 5 times more. So ultimately, this means that Upstart is a very volatile stock, unlike this one here, which is EOG. I believe this is some sort of energy company, but it has a beta of only 0.01 and also a correlation of -0.14, almost zero. So basically, this stock has almost no relationship with the broader market, and therefore, as the S&Ps move around, that's going to have basically no impact on what this stock does. And so bottom line here, using correlation and beta on your watch list gives you some very clear insight into, of course, how a potential position on that stock is going to make or lose money based on how the broader market fluctuates on a daily basis. And then lastly here, specifically in regards to ThinkOrSwim, if you want to either add or remove certain metrics from your watch list here, simply go to this small little gear icon right there, click on that, and then go to Customize. And that opens up a small window right here where on the left-hand side, these are all the different metrics and indicators you can add to your watch list if you want. And then on the right-hand side, these are all the metrics I currently have showing on my list right now. And then obviously, as you can see down here with these two buttons, it's very easy to either add new metrics to your watch list or remove existing ones if desired. And so with that being said here, that's going to do it for this video. But of course, one last thing, as I mentioned at the beginning, if you want to learn how you can automate your exact trading strategy and perform detailed research with things like backtesting software and simulations, then join Option Alpha today for a free 30-day trial. And so this powerful and very easy to use software allows you to rapidly configure trading bots that will execute your exact trading strategy automatically. Right? So it's the perfect way to eliminate human error and emotion from your trading while ensuring that your portfolio is always being actively monitored and managed while the market is open. And you can also use Option Alpha's powerful backtesting software to improve your strategy by continuously testing and refining your approach over decades of stock market data. And finally, the Option Alpha platform offers a huge online community where you can engage in discussion with other traders, get answers to all of your questions, and find inspiration for new trades and strategies. And so if that sounds good to you, then again, use my link in the description of this video to sign up and begin your 30-day free trial. And also don't forget to check out and join my options trading Discord as well as my Skillshare courses. Links also in the video description. And finally here, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week and you don't want to miss out. So thanks again for watching, and I'll see you next time.